can hear you. Go ahead.
All right, sir. Okay, today we'll be looking at support and resistance. I'm going to go both theory and through. I'm going to go through both theory and practical aspect of it. Now, looking at my screen, we'll have support and resistance class. This support and resistance, if you can be able to grab it tonight, it's going to guide you based on trading on forex, cryptocurrency, stocks. In fact, anything that has chart, you're going to trade it with ease if you are able to understand what support and resistance is all about today. Before I proceed, my name is Emmanuel Yadebube. I'm the owner of Blue Green Pips. So let's move fast today to today's class. Now, support and resistance are the strong points in the market where the market gets to and reverse or react. Support and resistance are points in the market whereby the market gets to that point, it's either react or it reverses. It can be likened to floor and top, respecting the law of gravity. Yes, when it comes to support and resistance, I think that law of gravity is the example I can actually use for you to understand what support and resistance is all about. For example, if you bring a football and throw it up, if you go to a particular point in the air and start coming back, that place will you see it as resistance. Now, when it comes down, it will hit the floor. That floor it hits is we call it support. That is what support and resistance is all about. So support and resistance are not line. So many tutors, so many YouTube teachers and all that to tell you that support and resistance is a line. Support and resistance is not a line because it is not a particular figure. It is not like, for example, if you're expecting the market to come to $1 and respect support on $1, it may not be on $1. It may come and respect it on 0.9.
The screen is not showing. Are you the one that paused it?
No. Are you seeing it now? Hello?
The screen is paused. It's not showing. Michael, you are supposed to be giving him feedback. The screen is on pause. It's not showing.
Okay. Let me check. Let me check what the issue is.
As you teach also, you can be.
Okay. Now, if you look at from what I was explaining, support and resistance is a part. Are you seeing it now?
Not showing.
It's not showing.
Yeah.
Ah.
Yes, Michael, is it here? For you, Mama. You are supposed to be giving him.
Is it showing now?
Not showing. I think you have ended it. You have ended it.
Are you seeing it now?
Yes, it's showing now.
All right. So support and resistance is not a particular line. It is an area. It is an area, not a line. Because a support you might be seeing a support on $1, exactly $1, but the market may not respect that point. It may come to 0.8 and stop, telling you that support and resistance is not a line. It is an area whereby the market gets into that area and begin to react to tell you that something is about to happen. Okay? Now, support and resistance, support can actually turn to resistance. There are situations where support can actually turn to resistance, while resistance can turn to support, in the sense that if the market breaks a support, it will retrace back to touch that same spot which you now turn to. Sorry, if the market breaks a resistance, it will test it again to turn to support. I will explain this thing using charts. I'm just going through the theoretical aspect of it so that I'll carry everybody along. Now, types of support and resistance. We have horizontal support and resistance. We have trend line. We have moving average support and resistance. And I'm going to show you the best time frame to draw support and resistance, which the market respects so well. I'm going to show you how to enter on a support and resistance using conservative entry and aggressive entry. Now, let's go down to the practical aspect of it, whereby I will be touching all these things that I've been talking about here. Okay, this is a this is the Reef platform. Now, I'm going to show you what support and resistance is all about here and how to plot your support and resistance. Support and resistance simply means where the market always come and touch, it begins to bounce down. If it comes there, it either bounces up or it bounces down, depending on the market structure as of then. Now, from okay, now from my chart, are you still seeing my screen, sir? Hello, hello, sir. If you're seeing my screen, can you please type in the group? All right, all right, all right, all right. Okay, so now this is the Rift platform. This is volatility 25. Now, please, the mistakes many traders make or they do is that they normally plot their support and resistance on lower time frames. You don't plot your support and resistance on lower time frames. You plot your support and resistance on higher time frames, because if you plot your support and resistance on lower time frames, the market will come to that resistance or that support and break it easily without reacting most times. It will come there, break it without reacting most times. But when you draw your support and resistance on higher time frame, had it been we are analyzing on currency pair, let's say if we are actually analyzing currency pair or cryptocurrency, we would have been drawing our support and resistance using 1 week time frame. We call it top-down analysis. You would have been drawing your support and resistance on 1 week time frame for currency pair and cryptocurrency or any other commodity. But when it comes to the reef, being the fact that the reef only gave us the opportunity to draw our support and resistance, or the highest time frame they gave us is 24 hours, which is 1 day. So you're going to draw your support and resistance on 1 day time frame. Now, this is how to draw support and resistance. Now, if you watch this market, you'll see that this market came here, it tapped here and bounced to the downside. It also came here, it bounced to the downside. It also came here and bounced to the downside. It also came here and bounced to the downside before it started going up again. Now the market is on that same support right now. Here. That is the reason why you see the market stopped bleeding and is now trying to correct a little bit, maybe come to this point. The market might come to this point before another breakdown to the downside if it will break down. Now, for you to draw your support and resistance, you don't some people I always see people drawing support and resistance with line like so. they will bring the line and they will keep it here. One support and one support. They will keep another one here. They will keep another one here. They will keep another one somewhere around here. They will keep, they will keep another one somewhere around here. Which one are you? If you are actually trading, which one are you going to respect? Your chart will be clustered. Your chart will be clustered. Why you should have made it very simple and easy, so that you understand your trading and understand where the market is actually going to. Now watch me replace all these lines with just one zone. Just one zone. Now look at what I'm going to do. When you open your chart, you zoom in. You zoom in to see the past events that happen in the market. You zoom in so that you see everything. Now, if you come here, let's start from here. If you bring out your rectangle box, see this all this support and resistance. You just guide it with just one zone, one single zone, like so. One single zone. Now the market has come into this zone, this area, and it's now reacting. You see the way I now use one single zone to cover all those lines that was clustering here. That is support and resistance for you. Now, if you watch this market, I'm going to use an arrow now. The market came to this downside. It came to this zone. It bounced down, telling you there is a resistance there. It came down. It touched this resistance again. It came down because there is a presence of double top. Now the market started bleeding. It started bleeding. It came here. It started going up to the upside. Immediately, it came back to this zone again. It bleeded again, telling you that there is a strong resistance there. Remember, whenever the market is below that zone, it is called resistance. Whenever the market is above that zone, it is called support. Now the market came down again. It came back to this resistance again. It faked out. Here you are seeing a kind of manipulation. There was a kind of manipulation here, taking stop loss of traders. That is the reason why you are seeing that arrow, which I'm going to show you. Let me show you the arrow before I proceed. Now, watch very carefully. The market should have respected this zone just like every other touch on that resistance. But here, something happened. The market bleeded above it and reversed back immediately. This is stop loss hunt. Whenever you see somebody talking about stop loss hunt, this is an example of stop loss hunt. Many people, immediately this candle closed, this is 24 hours candle, immediately this candle closed, many people will be like, oh, the market has broken above that resistance. It is time to enter the market to click buy. Immediately you click on buy, your stop loss will hit and the market will reverse immediately. This is stop loss hunt. Because you will be looking at let's say you'll be looking at your entry from here. Your entry might be here and you're breaking your stop loss somewhere around here because you feel like the market will come here and reject immediately based on aggressive traders. Because if I'm trading this kind of market, number one, I won't enter the market on support and resistance. You don't trade on support and resistance. You don't enter a market on support and resistance. You trade the bounce. I'm going to show you how to trade the bounce of support and resistance. If not, if you are always entering the market on support and resistance, the market will always fake out most times, take out your stop loss and still go to your direction. So the best way to trade is don't trade on support and resistance. Don't buy on support. Don't sell on resistance. You only trade the bounce. Now, many traders might have entered this trade by clicking, place their stop loss above this previous candle like so, waiting for the market to come to this zone and reject and start coming down like it has been doing. But the reef manipulated the market there. They blew off your stop loss. They blew off your stop loss immediately because you didn't wait. I always tell many people, even my students, guys, don't trade on support, don't trade on resistance, wait for the bounce. Another thing is go to your risk management, your trading psychology. What's say all the knowledge you have in trading is just 40%. 60% is about the waiting. You need to wait. You need to have patience. If I am trading this market, let's say I was actually trading this market, I would have seen the way I would have entered. I would have waited for this market to clear all these candles. Come, around here. I will wait for this candle to come around here, close. Then my stop loss will be above here, and my first take profit will be on this zone. The second one will come down. That is how I trade. If you are trading with this pattern, the market if you are trading 10 times in a week, I bet you will have at least that you don't have winning, you have at least 70% winning out of 100. I am telling you. So let me proceed. Now, the market came to this resistance, it still bounced down, but as the market is in an uptrend, the buyers came in again, they pushed that market above. They pushed that market above that resistance, like so. They pushed it above. Now, when the market now got to this point, it retraced down. It now created a lower high. It came down again. It created another double top, which is equal highs. It's now started coming down again. I was actually watching this trade, and I was seeing people trying to click on buy button because they thought this is a very strong support. They thought this is a triple bottom, like many people always shout. I was actually watching people trading this thing. I was sitting on my hands. I wasn't doing anything. I was just looking at latitude 25 because I knew that this is a Fibonacci play. I'm not deviating. I will still. I'm just trying to let all of you understand this. This is a Fibonacci play. The market haven't actually relaxed on that Fibonacci, and I knew that because this market has started forming a downtrend, it's going to tap this zone before any other move. I'm very, very sure of that. So I was actually watching this for latitude 25. Now it broke from this place. It broke out from here, touched this zone, and started coming down to touch another zone. Guys, the market goes from zone to zone. The market goes from zone to zone. If it leaves a zone, the next place you're going to see it is another zone. Now, I explained something telling you guys that most times resistance turns to support, and support turns to resistance. What am I trying to say in that essence is this. Now, if you watch this market has been below this resistance for a very long while. It has been creating higher highs and higher low, coming to this resistance. Whenever it touches this resistance, it will break down. Now, because the market is in an uptrend, it came down, touched this zone, it broke above it, touched here. Remember here used to be a resistance. Whenever the market is below here, this is a resistance. But immediately the market broke above it, it came down to this point. Here now turns to support. Here now is now a support. Here now. Who is disturbing the class? Okay, so here now, the market. Mr. Nathan, you are disturbing the class. Mr. Nathan, sir, can you please mute this guy? Okay, so now here now turns to support. Remember when the market was below it, it acted as a resistance. Now the market is above it, is now acting as support. Now let me draw more support and resistance so that you understand how to draw this thing before I go into entries and exit based on support and resistance. Now watch what I'm going to do. Wherever the market taps and reacts is where I'm going to plot my support and resistance. Now let's do it together. Watch here. Watch here. Now look at what happened. The reason why I selected this one is so that you people understand. Now watch here. The market came here, it touched here and rejected and started going to the upside. The market came here, bounced here, and started going to the upside several times. The market came here and started going to the upside several times. This is a strong support. Now watch, the market came here, bounced up before breaking it. It came here, bounced up before breaking it. Now watch, this is all these things, all these ones I drew now are support. Now let's try the resistance. Let's try the resistance. Meanwhile, let me bring it down a little. Good. So that it will touch everything. Now it came here and acted like a resistance. Watch. It came here, it immediately it touched that zone, it came down. It's now acting like a resistance. Watch here again. It came here, immediately it touched this zone, it came down again because it is now serving like a resistance. Before the market now broke above it, the market came and now broke above it. Even when the market broke above it, even when the market broke above it, there is a particular small support it touched before going to the upside again. Now let me show you inside there. Look at it. This week there is a week here. It tapped that week before going to the, it's a confirmation. This is a confirmation because you were not able to enter the market from here. Maybe you are afraid. Okay, I don't want to enter on support and support or on resistance. Let me wait for a pullback. Immediately the market left you, came to this side, bounced here, and started retracing. This is what we call conservative entry. Immediately the market was actually retracing. You now wait for the market to come here before you now enter, and it start creating its higher and higher lows again, which this thing is simply a Fibonacci play. I know that. If you plot your Fibonacci from here to here, are you seeing it? Very easy and straightforward. This is a Fibonacci play. This is a Fibonacci play. You see how the market starts on that 50% Fibonacci before it started going to the upside again. I know I am using higher time frame. The reason why I'm using higher time frame, especially this 4 hours, is because this is the best time frame to plot your support and resistance. Guy, if you are using 1 hour 15 minutes to plot your support and resistance, you will turn to liquidity for this market. I am telling you from experience. You will turn to liquidity. The reason why you are meant to draw your minor support and resistance on 1 hour 1 hour time frame or 4 hours time frame is for you to know that there is still another small places the market can touch, drop like 4 to 5 candles on 4 hours before it starts to go to the upside where it should be going to. But any resistance the market hits on 1 day time frame, or any support that the market hits on 1 day time frame, definitely it will react hugely because it is on a higher time frame. That is what I'm trying to explain. Now let me go more support and resistance so that you guys will understand again more. Okay, well, let's look at this one. Let's look at this one. Okay, I've drawn. You always draw your support and resistance on the obvious. Don't start to force it. If you are trying to peep, where is the support and resistance? Where is the touches? Where is the touch? You know that place is not a support and resistance. Anytime you open your chart, you want to draw support and resistance, and you are seeing where is this support and resistance? That means that place is not support and resistance. Support and resistance will have many touches for it to be valid. It must have many touches for it to be valid. Now here is also a resistance. In as much as the market haven't broken to the upside from here is the market touched here, it came down, it touched again, it came down. Now anytime this market breaks up, anytime this market come here from here, breaks above here, it will come and tap this zone and form a support here. That is just what I'm trying to explain. It's as simple as that. The market will tap there to tell you that is a strong support because the market touched there twice and reacted on higher time frame. Okay, so now I want to show you how I believe I have explained support and resistance to the best even a child can actually understand it. Okay, let me use another pair for example. let me use volatility. Let me use volatility 10. Good. Now let me use volatility 10 index. Now, first thing first, you zoom in to see all the charts. Then you now plot the support and resistance on the current this thing, the current market. Now you bring out your supporter, your two, your rectangular two, connect it like so. This is first support. Now clone it, put it on the obvious. Anytime you are looking and doing, is this support? Is this? It is not support and resistance. Support and resistance are very easy to understand. This is another resistance. So if you watch these two places that I plotted this thing now, they are very, very easy. If you see, you can naturally see that whenever the market gets to that point, there is a big reaction, there is a big fall, or there is a big move. Now let's draw another one. If you keep this thing here, you see that whenever the market taps here, it rejects. Whenever the market taps here, there is a rejection here. Now the next place you're going to draw your support is here. Whenever the market taps here, it reacts. See here, the market always reacts. Now watch, let me show you. I'll start from the bottom. First touch, reaction. Second touch, reaction. Third touch, reaction. Fourth touch, reaction. Now watch the second one. First touch, a reaction. Second touch, a reaction. Third touch, a reaction. Fourth touch, which turn to resistance, a reaction. Now let's go over to the third one. A tap here, reaction. A tap here, all these places are reactions from this zone. Whenever the market wasted a lot of time here because that was a very strong support that never wanted to break. But the sellers were too much. The sellers were more than the buyers. That is the reason why the market broke that support. Now, a touch here, the market, that was a neckline. A tap here, you see, when the market came here, reacted, many candles were there. Now let's go over to the last one. A tap here, there was a big fall. A tap here, there was a big fall. This is what support and resistance is all about. At this top, the market is reacting or acting like resistance. Below here, it is acting like support. That is what support and resistance is all about. Now, let me go over to this thing. Let me see if there is something I'm missing. Because I believe there is another person that will still teach this night. Types of resistance. Okay, let me touch these types of resistance. We have horizontal support and resistance. We have trend line. We have moving average. Let me go over to horizontal. Okay, I have done the horizontal aspect of it. The horizontal aspect of it is the one I just finished doing now. Now let's go over to trend line support and resistance.